So let's talk about how we can chart price. And for this video, we're going to talk about Renkos. And the best way to answer the question, what are Renko charts, is I describe them as a fixed size brick that they plot on your charts in relation to the price movement. And they are very different from your common bar chart, your Japanese candlesticks, or Heiken Ashi. Renko charts only print another brick when price movement exceeds the box size that is set. Understanding that another brick prints only when a set amount of price movement has occurred, you can see a huge benefit of Renko charts, and that would be the removal of market noise. Now, Renko charts are going to appear to lag current price because the chart does not constantly plot according to time, which could be an issue for some traders. And we actually use a Renko type bar with our high velocity wave trader trading system. And we have a free webinar. You can check that out in the description. Click that link and you can see how we use it. It's actually a Renko / Heiken Ashi bar. It's pretty interesting. Check it out. Anyways, while you're busy clicking away here, how about you hit the subscribe button so you don't miss other great videos such as this one. Okay, so how do they work? All right, well, Renko bricks or Renko charts, they don't use time to plot. When the Renko plots, it depends on the input, which can be done in three pretty common ways. You can set the brick size of the Renko chart by using the ATR method, and that uses market volatility. And it's generally a 14-period average true range. You can use some random number. You can use a percentage based on the price of the instrument that you're trading. Now, Renko charts work with any instrument, and this is a daily Forex chart that compares the Japanese candlestick charts with Renko. Now here, the Renko chart has a brick size of 61 pips, and this is set automatically via the ATR. And you can see how it smooths the price action compared to the mess on the Japanese candlestick chart. Lower time frame Renko charts would have a smaller brick size, which is probably important for intraday traders. Bricks are stacked, and I want you to note only the corners touch on the Renko bricks. And if we take 61 pips as the set size, price needs to move 62 pips in order to have another brick plot. Now, what's the cons of using a Renko chart? Well, you're not seeing a mess of price action, but you're never going to see the exact price plotted via the Renko. Yeah, you can decrease the brick size to have more plots, but then you're defeating the biggest pro of Renkos, and that is cutting down on the noise of the market. Now, traders that like to be active in the market, such as day traders, they may discount the use of Renko in their strategy. Now, how about some strategies we can use? There are so many ways to trade, but I'm just going to focus on two broad overviews to give you an idea of how simple Renko charts can be when you're trading price action. We're going to look at support and resistance, holding or failing. And in overextended markets, that mean revert. And I'm going to add that you can use these exact same strategies, these approaches with candlesticks, but you might find that Renko charts will allow you to see the structures on the charts a little bit better. And I actually have a free PDF that you can download at the link above or in the description. It's about price pattern trading. So I hope you take a second to grab a copy of that. Okay, so resistance and support, holding or failing. Now I've synced all the lines to each chart, so you can easily see that all the choppy action on the candlestick chart is non-existent on the Renko. So the Renko has allowed you to spot the range and the breaks pretty easy. So this move here breaks over resistance, but it falls back inside the range. And I call these failure tests. And this zone lines up with number 3 on the chart on the left. This lines up with number 4 and is a successful breakout. Now, the upsloping trend line is pretty easy to apply to the Renko chart, and it just gives us that the breakout has a higher probability of sustaining due to price making higher lows into resistance. So as an aside, this snapshot was actually a live Renko chart, and you can see on the right that while the Renko plots at 1.7641, the true price was actually 1.7607. So if you're an active trader, you may find that to be a bit of an issue. But what's obvious is that you cannot trade candlestick patterns that rely on shadows or inside bars. You can, as you see on this Renko here, look at various forms of triangles and horizontal chart patterns. Now, mean reversion, oversold and overbought. And I'm going to use a trading indicator, the RSI, for the oversold, overbought reading. But in live trading, I resort to price action and context to find mean reversion candidates. And there's a video on this channel that covers the RSI, and I've linked that up in the right corner of this video as well. Now, this is a daily stock chart of Citigroup. Renko charts can be used for stocks, futures, Forex, doesn't matter. So we're not always going to catch every move. And when using oversold or overbought strategies, you may not get a corresponding price structure setup. Now, the far right shows an oversold stock, yet you'd have to search for a price structure reason to enter. So let's break this chart down. So the market's overbought and is sunk below the overbought 70 level. Price was putting in higher highs and lows while price hovered around the oversold level. A simple trend line shows where prices made a lower low, failed to make a higher high, and was capped at the backside of the trend line for a short. Price is oversold and has come right into a previous zone of resistance that is acting as support at this location. Now, price is sustaining an overbought condition. Price breaks the trend line and puts in a double bottom. Failing to make a high is the short zone on the back of the trend line. Now, what I like is that double tops and bottoms, ranges, or any consolidation are pretty easy to spot with Renkos. And that makes being on alert for breakouts a lot easier. So should you use Renko charts for a strategy? Now, I can't answer that for you, but for me, I don't think I'd wrap a complete trading strategy around just using the Renkos by themselves. There's some price action I like to see, including momentum types of price action movements. What about for finding support and resistance? Well, I like it. Why? Well, traders often think that support and resistance are exact price points, but they're not. They are zones of price, and Renko charts allow you to see those zones pretty easy. So in that case, they would make a good addition to a strategy. What about for trend? If I were to use Renko, determining the overall trend direction would be something I would consider. And if you were to follow the trend direction shown by the Renko chart, you may not have been involved in the price direction on the candlestick chart. And that's going to depend on the setting that you choose for the Renko bricks. So to wrap this up, I prefer sticking to more conventional charts, but Renko does have some pluses, like removing market noise and giving you a better view of price structure. But let's be honest, there is no best when it comes to your charting type, as every single trader is going to be different. But you have to find out what works for you. And for some, a Renko chart strategy may be where you find actual trading success.